Good morning, traders. It's Tuesday, March 14th. Taking a look at the charts, we got the SPY ETF here on the right-hand side. This is the daily chart. And then we got the SP 500 futures. This is the 30-minute chart on the left, looking back a couple weeks, just really for the period of March. Now, overall, what we're looking for here, what we've seen the market kind of dip into a short-term oversold indicator or level here a couple times. And once again, just a few days ago, and of course it had a pop up and came up to a short-term overbought level, kind of dipped back down, and it's kind of been consolidating. This morning equities are trading right down here at the 20-day moving average, which is what this green step line here, it's the 20-day moving average overlaid on the 30-minute chart, which is why you get that kind of jagged stepping action, but it gives you the visual of where the 20-day moving average is on the intraday chart. And where we're at, we went from an oversold condition where the market kind of spiked up and gapped higher, and we got into a short-term overbought market condition with our panic buying, our greed indicator, and then the market pulled back to the 20-day bounce. It's been consolidating here, and we're starting to see it move lower. And again, what we've been looking for, if we take a look on the left-hand side or the right-hand side, we've been looking for a move down to this level, which is a gap fill. And then we're looking for a bounce up to this area, which we've more or less had. We could see the market go a little bit higher, but overall we've had this bounce up into a resistance zone, and we're looking for this ABC, this third wave down that flushes this low out, and we see some panic in the market, and we see the VIX start to spike, and we get this ABC correction before we start to see the market move higher and potentially go to new highs again. So that's kind of where we're at in the grand scheme of things. The market bounced up to resistance, and we've got our short-term and momentum kind of cycles kind of topping out here, and hopefully we see everything kind of pull back down back into this lower reversal zone as the market does a complex three-wave correction here. If we take a look, just zoom back on the chart and look at the intraday here, what we're looking for is simply we've had this pullback, and we were seeing it bounce up, and now we're going to see it come down and potentially flush out over the next 3 or 4 days and come down to this level down here, and then we could see it start to rally again. So that's kind of where we're at in the grand scheme of things. Now, if we take a quick look at the NIB, Coca had a nice move up yesterday, up about 4.5%. This morning it's just starting to move up again, continue to go higher. It's up about 0.8% this morning. So we might have some traction here. We had some big volume yesterday, and if we can break this high and hold above it, I think it could be the start of something fairly significant, and we could see this rip to the upside. If we zoom out on the chart here, we can get a better feel of where some critical levels are. If this unwinds, there's potential for it to completely unwind all the way up into this 35, 36 area. But this here where we had some big expansion to the downside, where it had two big gaps, that's where the market really kind of let go. So somewhere into here, this 30, 32 more or less to the 34 is going to be a fairly significant resistance zone that gets filled. And that would be the first level, and then potentially, obviously, it could form a large basing pattern and come back up and trade along this 36 to this 40 range, where there's this huge sideways action in here. It could come up and make a big handle or cup and handle formation eventually, but that's a long ways away from where we're at. Right now we're looking for some traction and for this to have a real strong short covering rally and see this rip all the way to the upside to the 29.30 area and see where it goes from there. Taking a quick look at gold this morning. Gold and silver continue to kind of fade around. They've come down and hit this measured move where we came down, hit the 100% measured move based on this first pullback and bounce. It doesn't look like much on the daily chart, but gold, silver, and miners, they all had a very similar price action that gave us a downside target. Gold pretty much nailed it. It looks like pretty much to the cents. It kind of bounced back up to the 618. Now it's just kind of flagging here. And we're just kind of letting gold and silver and miners kind of just work themselves out. I think there's potential for them to, all this is just a short-term target where it could bounce up and it could easily continue to extend down to this next level, the 618 level. And it would flush this low out and give us a more complex kind of correction that puts some fear into the market and cleanses it before I think we could see gold and silver start to go higher. Overall, we zoom way back on the chart here. We've got this potential large basing formation, this bottom that came in. We had a nice impulse wave to the upside. We've had a nice complex kind of move at this point, a nice kind of three-wave correction flushing the market out. We've had a nice pullback here. Ideally, it'd be nice to start to see this firming up and moving higher back up to this, starting to form a bullish kind of pattern here for it to start to break out and eventually pick up speed to the upside. But we might see it come down and trade potentially in this little range here for a little while and build more of a flat base. And the market always has a way of dragging itself out and going sideways a lot longer than you anticipate. So either way, I still am bullish on gold and silver long term, but they're deep into this major basing formation, and they're a long ways from breaking out still. And we really just need to let the market kind of work itself out. And I don't think we really see gold and silver miners break out until June, July. Later this year, when the equities market, I think, starts to top out. I think we'll see these firm up, start trading under this critical resistance level at the 1400 gold. And then June, July, maybe August or something, we see this really start to break out and start a new bull market. So that's kind of where we're at for that kind of safe haven play. Looking at natural gas, we've had a cold spell coming through, and we've seen the market continue to climb and kind of grind up. We talked about this yesterday, that when you get this narrow channel rise, just like what silver does, when you get a tight narrow channel, it's built up quite a bit of energy. A lot of positions are building up in there, and when it does break to the downside, usually you have a very strong down bar, and things can get pretty ugly. So overall, we're just kind of letting this kind of work itself out. It's gone into a very large bear flag, or potentially a new kind of leg higher, but we need to see it flush itself out and form some type of bullish correction and get into some type of oversold condition before it looks like a potential buy to get long. Looking at crude oil continues to slide today. Let me just flip the charts here. This is the daily chart. Crude oil continues to slide. It's down about 1.5% this morning, so it's continuing to slide down a bit here. Overall, the quick drop and kind of flush out has taken place. Yesterday, we had a 3 bars to the downside, a little doji candle, meaning it opened and closed pretty much at the same price, indicating that there's stabilization of price. Today, we're seeing really that signifies that we could easily see a sharp bounce back up, which is why I wanted to cover our position and lock in a 7-8% profit there. And we're just going to let this kind of work itself out and see if we get a potential reversal pattern and long setup for us to go long going forward. Overall, if we zoom out on the charts, you can see where we're at in this grand scheme of things. There's still some more downside potential here. Now this breakdown that we saw, we've been looking at a much closer view. We've been looking at it right here, saying, well, if it breaks this coil, this tightening coil here, that we're going to have a big unwinding back down to that 48, 47 area, which will bring us down to critical support. We had a nice quick move. We pulled some money off the table, and there's still a bit more room for it to fall and kind of flush itself out before it hits this much larger pattern. And of course, if it breaks below this larger pattern, we could potentially see crude oil go into a free fall, and really things could get pretty ugly with this being critical support, the lows that we saw back in 2016. So that's kind of where we're at. Ideally, we're looking for something down in here, some type of reversal pattern or an oversold condition that we can identify and potentially get in with a long position for a knee-jerk reaction bounce back up to the 50, potentially 55 area. And if it breaks to the upside after that, then all the better. But right now, we're just kind of letting it finish this kind of sell-off and see if we get some type of long setup going forward. Last but not least, let's just touch on the VIX real quick here. The VIX moving up a little bit today. We haven't seen a big spike in the VIX in a while. Let's just zoom way back out here. The VIX, typically we see, you can see the cycles in the market. They're usually fairly well spaced out. And we've kind of gone that time frame where we're kind of getting ready for some type of spike. And if all goes well, we see actually a spike in selling in the next week or two here as the SP 500 potentially has a sharp drop in this ABC correction we've been talking about, and we see some real fear jump into the market and kind of cleanse the market of the longs and gets everything kind of re-energized for potentially a new leg up. But typically you don't go a whole lot higher without having a cleanse and wiping out a whole bunch of long positions, spooking them out, getting people short, and then the market will start to move up. So that's kind of what we're looking for, is a quick spike, cleanses the market, and then the market can actually have a significant rally versus just grinding its way up a couple points here and there every other day. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.